said the most successful 100
days.
days.
Tariffs. This is the reordering of global trade.
All down below, as you can see there, 3%.
Are you too confused what's happening in the U.S. stock market? This video connects the dots between now and the year 1929. Throughout history, market crashes have followed predictable patterns, each with its own signature cause. The COVID crash of 2020, the financial crisis of 2008, and the dot-com bubble of 2000 each had clear triggers. But today's market in 2025 presents an enigma: extraordinarily high valuations across sectors that don't align with historical crash patterns. To understand what might come next, we need to look further back, to the Great Depression of 1929, where we find unsettling parallels to our present situation.
Another gun, hoist the flag and let her fly.
As the dizzy decade nears its end, the country is stock market crazy. The great and the humble, the rich man and the working man, the housewife and the shop girl.
From 1918 to 1929, after the World War I, the S&P 500 grew nearly fivefold. It was exponential, even on a log chart. But here's where it gets interesting. This wasn't just organic growth. It was fueled by speculation and leverage and high debt. Looking at the people, everyone was buying stocks on borrowed money. Stockbrokers provided high leverage. Basically, brokers provided high margin. For example, they provided $9 for every $1 people had. People could buy $10 worth stock with just $1 in pocket. Brokerage firms were handing out loans like candy because, well, greed was good back then too.
Smoot-Hawley, signed into law on June 17, 1930, raised U.S. tariffs on over 20,000 imported goods.
For these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long...
Similarities between 1929 and 2025 are striking. Both periods followed wars. World War I during 1914 to 1918. And this era had localized conflicts within Russia and Ukraine, Israel and Palestine. Both eras were marked by devastating pandemics: the Spanish flu of 1918 and the COVID-19 pandemic of 2020, reshaping global health and economies, which led to skyrocketing stock markets, both the times. Built on greed and speculation, both times U.S. debt as a percentage of GDP has reached concerning levels. And finally, both eras are now seeing tariff acts: Smoot-Hawley Tariff Act in 1930 and Trump Tariff in 2025.
Donald Trump is raising tariffs against China to 125%.
Do you personally expect a recession?
Probably that's a likely outcome.
There is a crucial difference between 1930s and this era of 2025, and that is the depth of globalization. So now, U.S. has imposed nearly 125% tariff on China. It's not just hurting Chinese companies. It's hurting American companies that rely on Chinese manufacturing. We have companies like Apple making iPhones in China. This intricate web of global manufacturing makes policy decisions infinitely more complex than in the 1930s. It's like shooting yourself in the foot with a bazooka. Well, that's why, recently, U.S. came to their senses and exempted electronics items from tariff and paused the tariffs to most countries for 90 days. And all thanks to Jamie Dimon of J.P. Morgan Chase, who through a well-timed Fox News appearance warned of economic fallout and nudged Trump into rethinking the tariff strategy. Some people say Jamie Dimon went on Fox News on purpose because he knew Trump and his team watch it closely and take it seriously.
Back in 1930, India was under British rule, and most of the country's income came from agriculture, with little control over its own economy.
It says India will have the world's third largest stock market by 2030. This is thanks to investments being made in technology and energy.
Let's shift our focus towards India. Interestingly, if we compare 1930s to 2005, India presents a fascinating case study in both eras. During the Great Depression, India's economy under British rule was primarily agricultural and supply metal for wars, thus initially appearing insulated from America's financial troubles. Similarly, in 2025, India is positioned as an emerging market star with a booming economy. But historical lessons are sobering. When the Depression deepened, Indian farmers were devastated as agricultural prices collapsed, forcing them to sell precious metals to pay taxes and agricultural land rent. Similarly, today's India shows similar vulnerabilities despite its manufacturing growth, with its stock market already declining 15% in the past 6 months due to overvaluation of stock market.
I think that in the financial and the investment world, there are patterns. There's a quote attributed to Mark Twain, history does not repeat itself, but it does rhyme.
So here we are, standing at another turning point in history. And I am remembering a quote from Howard Marks's book, Mastering in Market Cycle, that cycles do not repeat themselves, but they resonate with themselves. We may not experience an exact replica of the Great Depression, but the echoes will be seen. Today's market valuations, geopolitical tensions, tariff policies, and debt levels align disturbingly well with the patterns of 1929. The question isn't whether a correction will come, but how governments and markets will respond when it does. History doesn't repeat, but it does rhyme. And right now, the rhythm sounds eerily familiar. If you enjoyed our story drawing parallels between today's world and the 1920s and feel you learned something valuable, please share it with your friends to spread the knowledge. For more insights and future financial education, don't forget to like the video, subscribe to the channel, and drop your thoughts in the comments below. And I leave one last video of Donald Trump sharing how the world reacted to his tariffs. Let's just say, he thinks world leaders suddenly became very affectionate.
These politicians go around saying, because I'm telling you, these countries are calling us up, kissing my ass. They are.